Welcome to the Fair and Greed Daily Business Interview. Emerging markets can appear to hold attractive investment opportunities, but they're not for the faint-hearted. Emerging markets might have a different rule of law or different sovereign risk. There's cultural risk, information risks, a whole host of other factors compared to nations like Australia, the US or Europe. I thought I'd ask an expert about emerging markets and maybe he can provide some insights into how to think about investing in that category. John Moorhead, Head of Global Emerging Markets at Maple Brown Abbott. Welcome to the show.
Hi, Sean. Thanks for having me.
So let's start with the very basics. What are we talking about when we talk about emerging markets?
Yeah. So emerging markets are really a very broad and wide-ranging group of countries. Broadly, you can think of it as any country that's outside what we would think of as developed. So that's outside North America, outside Europe, Japan and Australia, roughly. So on a world map, you're looking at anything from the Philippines and Korea and go west all the way through India, Middle East, Eastern Europe and Latin America.
Okay, so what are some of the bigger ones? So China's obviously a bigger one. What about places like Mexico and Brazil? They're all included in that?
That's right, yeah. So China's clearly the largest. They're about 30% by weight and 50% by name in the universe. I should say, the index is about 1,400. In the universe, there's about 3,000 listed companies that we would include as investable. And exactly, the next up-and-comers behind that are India, Taiwan, Mexico, Brazil, South Africa. Saudi Arabia is coming up as well.
Okay, so how have they performed? I mean, are they expensive markets? When I'm thinking about investing in emerging markets, and I might go to an organisation, I mean, it's kind of a lot of these markets are difficult to invest directly in, so maybe you go through a managed fund or however. But what is it that I should be thinking about it? I'm interested in the risks, I suppose, to start off with, and then price.
Yeah, so a lot of investors would likely know emerging markets when they really came on the scene was in the 2000s. As China entered the WTO, when you had the commodity super cycle, and emerging markets absolutely boomed then. So when you say today, are they expensive or how have they performed, what's their price? Over the last 10 years, it's been a pretty much flat market. And I would point out to that over the last 10 years globally, it's been the US and then everyone else behind that. So Europe, EM, even Australia to some extent. So valuation-wise, today we're it's about average, but again, it's such a broad group of markets that you really need to break that down into, there's 27 countries in there. And some are highly priced, like we would view India as a market that everyone knows, or at least a lot of people would know that India today is booming. The government's making a lot of reforms and infrastructure spending to unlock the potential spend in India. But it's well known and quite expensive. On the other hand, we've got markets like Brazil, where on a forward price to earnings multiple, the entire market's on 7.5 times earnings. So it is a big spread in valuations, but also a big spread in risk as well.
Okay, so what are the key risks when you're going into these sorts of markets?
Yeah, it's a good question. So one is they do have different political structures and different cultures. That's positives and negatives. So you need to have some knowledge around what's happening there. A lot of the smaller markets, they're quite tightly held and family controlled. So like Philippines or Thailand have a lot of families behind them. India, even a lot of the countries there's a lot more of private ownership, or they're called promoters. So I think it's something like 80% of companies in emerging markets are either tightly held by promoters or by the government. And the big risk that you would take on is currency risk as well. So even though we think the situation today is much improved than what it was over especially 20 to 25 years ago, in the last 10 years, you've lost a lot on the currencies as well. And we think we could be at a turning point there with what interest rates and inflation are doing in emerging markets, where people might be surprised that EM is well ahead of developed markets in bringing inflation under control.
Okay, what about things like, if I go and read a set of accounts from a company in one of those emerging markets, can I have the confidence in that as me reading Commonwealth Bank's set of accounts?
For the large part, yes. So a lot of the times it's the same Big Four auditors. They are professionally run and regulated as well. There are a few issues. A lot of the times the disclosure levels aren't anywhere near what you would get in developed markets. So you don't get all those details. Second is sometimes, and it's becoming less often, the companies may not report in English. So you'll need some local interpretation. So in my team here, we have Mandarin speakers or Portuguese and Spanish that can read into those local accounts to understand what's going on. But in general, the corporate numbers are believable.
Stay with me, John. We'll be back in a minute. I'm talking to John Moorhead, Head of Global Emerging Markets at Maple Brown Abbott. We'll put the risks out there. We're not an investment podcast, so certainly anyone listening that's interested, get your own professional advice to suit your circumstances. So they're the risks. What do you like? Firstly, do you think about a country like Korea as Korea, or do you think about it as a technology play, which happens to be Korea, maybe chips or something like that? How do you think about it?
Yeah, great question. And it depends on the makeup of the market, right? So Samsung, if you look inside Korea, Samsung totally dominates if you go and buy a Korean ETF, for instance, it will be dominated by Samsung. It's about, I think, 40% of the Korean weight would be something like Samsung. TSMC, Taiwan Semiconductor in Taiwan is similar. So if you're taking that top level view, I buy a Korean ETF, then you're going to basically be buying Samsung in tech. But as a stock picker, so I said earlier that the universe is about 3,000 companies. We have a portfolio of 30 to 40. So we're buying 1% of those companies. So for us as stock pickers, it's much more about going down to that individual company level and what's driving it, rather than we go into Korea and is Korea going to outperform? No, let's pick the better companies within that. That said, you can look at some of those big global trends. So what you said, like what's interesting or where we're finding opportunities, you can see, for instance, that Mexico is benefiting massively from foreign direct investment as companies that are maybe not pulling out of China, but making their next investments in Mexico or India or Vietnam. This is the nearshoring concept. And you can see that over the last 5 or 6 years, basically since Trump came in and put the tariffs on Chinese imports, Chinese direct investment into Mexico has gone from $200 million to $800 million per annum. And so that's those corporates setting up those bases in Mexico to service the US consumer base. And that creates opportunities, a lot of opportunities within Mexico, and it's our largest active position today.
Okay, so what sort of companies are you involved in? I mean, what do they do, those companies in Mexico that you invest in?
So, for instance, a direct player, it's been a long-term holding of mine, is a company called Vesta. They make industrial warehouses, so quite a simple business. A multinational such as Ford or Nestle will come to Vesta and say, we want to set up operations in Mexico, and Vesta will build them a custom warehouse. Generally, it's a 5 to 7 year lease with rents in US dollars linked to US CPI. And so for us, that's a really neat, stable business that they've been doing it for 25 years, and they've got a long-term track record of consistently growing. It's another family-owned corporate, so that's one that we like. But also the big long-term trend in emerging markets has been the rising consumer and that increase in consumption. So Walmex, which is Walmart in Mexico, we think that's a fantastic business that continually grows year over year as they roll out formal consumption. So a lot of the emerging world still has informal marketplaces. So Walmex can come in and roll out supermarkets and continue to grow there. Banks are another way of servicing that growing consumption as well. So, and we've got each of those in Mexico as an example.
Okay, so Brazil's relatively cheap. Mexico, there certainly are opportunities. Korea and Taiwan, they're kind of dominated by big players. We better mention China, though, because as you said, 30% and then 50% in terms of number. How do you invest in China?
Yeah, so that's the elephant in the room and a tricky question for emerging markets at the moment. When we're looking for stocks, we're looking for good quality companies, trading at good valuations, and importantly, we want to see positive change. So we want to see them going in the right direction. And when we look at China today through that lens, the stock market's down 50%. Right, and I just say to people, imagine if the S&P 500 was down 50%, or the ASX had fallen 50%. That's a real crisis, right? And China, the economy is still going, and the stock market's just halved. So valuations look okay. The valuations are okay. It's not extremely cheap from when we compare it across emerging markets. The quality, again, it's okay. The issue with China is it's a very big market. So if you're a multinational and you want to grow your consumption, like a Tesla or a BMW, you go into China, fantastic, big market, lots of opportunities. The issue is it's ultra competitive. And so they're really cutthroat on prices and margins. So it makes it hard to have these stable, growing businesses. There's a few that come out, and as we say, we only buy 1% of the market. And so the last one is change. So what's the direction of change? And today in China, it's still disappointing in that, yes, it's negative. The stock market's down, but expectations are still, in my opinion, too high. As the companies are reporting, that people are having to continue to downgrade their estimates. And it won't be until we see a bottom in those estimates that the stock market has a chance of recovery. Now, what could set that, if you want to go into the details, it's a confidence crisis that's going on in China at the moment. And we need to see the government set a floor under the property market and get that consumer confidence back up.
John, thank you for talking to Fear and Greed.
No problem. Thank you, Sean.
That was John Moorhead, Head of Global Emerging Markets at Maple Brown Abbott. You've been listening to the Fear and Greed Daily Business Interview. Remember, we're not an investment advice podcast, so always seek out professional advice to suit your circumstances. Don't forget to join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.